E from MarketWizards.com and eMiniWizard.com, about 11:15 on the 10th of May, 2019, reminding traders to use risk capital you can afford to lose. We're pretty stretched right now, and I'm reminding traders to make sure you are paid. We suggested 25 stops for anybody trying to buy, and it was more of a profit-taking idea than we really like to buy. We know we can get snaps, but we wanted to make sure we were done by this 26 to 25 on the short side. And the primary target achieved today was 29. So you can see how I liked this chart overnight. Basically, I looked at this area right in here, this 75 to 72, the gap area, and I said, okay, looks to me like tails, like it was abandoned on this 15-minute chart. And then if you scroll back to your 10s, you can see the same concept. This is our third time through trade right here around 52s. Zeek had made an outstanding call that if we break that 58, we're going down. Best call of the day. Absolutely right. And remember that scene of the crime at this morning, in the morning news. We broke that 57 area and it was lights out. We had suggested make sure you are paid 66 and a quarter for the half gap and make sure you are paid by 68. We thought that would be the resistance zone for first profit taking. When that comes down, we have no idea we're coming all the way back down here. Nobody does. But it was an idea that hit a bounce because we'd gone from high to low. So theoretically, you could hit one more bounce. And then when we take out these lows, it's lights out. So that's your third time through area right there. Coming into the end of the first couple of hours, make sure you are paid. All targets have been hit. Our primary targets go to any low today, but we want to keep an eye, we said, on yesterday's low. That will be an important idea going forwards. Above that and staying above it is a bounce. Going over and under it is basically a consolidation, and staying below it is continuation. These tails up here were the biggest key, right there. Last night, the market pounded up. Everybody was cheering and going up. I said, what if this is distribution? Well, it turned out that was true. And this bar, we lost this bar. This is your demon today, right there. This is a 5-minute chart. That is your demon. Huge. Came back, it bounced, could not take out the high, chop, chop, chop. Got under. And look how when this bounced up here, it stalled at that demon. Keep an eye on this chart. Anybody that's buying with 25 stop above 36 and a quarter is good fortune, and we can go to any high, but I'm not looking for a repeat of this just yet. I think we need some time to dig out of Dodge. But for sure, anybody that was looking for closing that gap down there at 22 area is already given back a lot more than what was left available for that. 25 stop till broken. There's that line we said, let's keep an eye on it. Paid for sure by 42s. if you are long. And we came all this way without any rotations. So on a V bounce, once we get a setup, then we can start rocking and rolling again. We're now paid by 42s. Okay, and this is our weekly look. And you can see why I'm suggesting paid by these 42s. Nice bounce off the floor. We're going to need the setup probably. You're going to need a few rotations. Time-wise, I like making sure you are done already. Short side, if you take any more short scalps, up to you, but get her done Friday. And sometimes you'll leave chips on the table, but you want to make sure that now you protect your profits and you use a portion of your winnings and risk, 10%, 15% of what you won, if anything, today, and to try new trades. Just trying to be conservative. So key idea coming into that 42s, make sure you paid. 41, 42. Another amazing day for the shorts. Unexpected by the the crowd that wanted turnaround Friday. Got to go up. I've said before, and I'll say it again. If your bias is too strong, it will hurt you. Too many traders don't look to take something out of the swings. They just try to cheerlead for their side. And very rarely will you even see them post where stops are or support or resistance. Just, ha bears, you're going to have another down week. You're going to lose all your money, whatever. Forget that. Those are amateurs. Professionals don't care which way it's going as long as they're in the direction and they're printing something. Just like yesterday, didn't matter. Once we saw that, okay, low's in, and now we know where support is, and then you look for your resistance targets. And then you try to understand the game and where profit taking will come in. That is sequence trading. Okay, here's our Globex chart for the day. Third time through trade, we know back here. And the all-important area that Zeek had talked about is now pretty clear as the middle, that 58 area. And you can probably hit one more bounce today, but be careful if we see a program trade start. And the way you'll tell is because there'll be bigger bars. Sanjay, to answer your question, I don't know. I just, here's one of the things that I try to understand to help you with that idea of why did I think it was distribution. We had taken out that 86.75, right? That was closing that gap, but then it kind of aborted just above it. So I'm just saying to myself, let me average that idea, of that 85 and the 89. Let's call that, 87, 88. That's why it said, okay, let's think of this 88 to 92 resistance. And when you get a long bar like this, it tells you two things. First, that the longs definitely want to be taking profits. And two, it tells you that maybe that's where the boys are hitting it. And that was still a dime under that 99 high. So I'm saying, you know what? That's their resistance zone. And then we have to play the 75s. And if they can take that down, then we know that we want to come back and test that 49 to 50. I posted that last night. And, this smoke 'em bar right here, right there. And then if we take that out, well, we know that the low is a fair game. So I don't know until hindsight to answer your question. But the feeling was because when I woke up today and saw that that was intact, I said, my instincts were correct. That, that was distribution. And I think because I keep an open mind, that's part of it. Because my first thought was, well, they're going to run again overnight, but we'll see. And then when it came back here, it's no, it's a lot more neutral. And then this morning, wake up and find that there's a new low from what you'd last seen. You say, okay, definitely. Now I'm seeing it. And I'm saying if we can get to the 42s to 32 range, done good. 29 showed up as our target. All right, great. We got lower targets, but you know what? I'm not worried about I'm going to call it chump change in the scheme of things with the big boys. This is the trade we wanted. Bang, done. You don't have to do anything. So to answer your question, just seeing this type of marginal high in the past and understanding that they got it back to that 62 area, which we know is the swing middle. So it's very neutral. So I guess that's the best answer I can tell you. And then keep an eye on that 85.5. And they couldn't get it back up above it. You can see it right here. It stalls. Right? Like just here. If you get it above here and keep going, then okay, abandoned. So realistically, hard to believe and shocking to the longs is we took out yesterday's range, both sides. Think about that. That was a killer day, and we took out the highs, and now all along screaming, and then we take out the low as well. So this is an outside bar. Crazy as who expects that? Anyways, great day. We do have lower targets. Let's review them one more time. So those numbers that we just posted, those are our ideas if we take out the low and any lower targets. This is a 5-minute chart. We want to be particularly mindful of the blue line that's next, got to hold. And typically what we find is when the market is ready to snap, kind of ignores a lot of the lines, including that blue line. You saw it yesterday. Dipsy doodle, and then here, and then you've got to read this, because once we get above the blue line on that, and it doesn't have to be exact. This is why some traders hate moving averages, because they're confusing. But if you go and you look at your bigger ideas, you will always find the next big level that will help you. Okay, and today I'd say, well, for sure, I like the 30 as our backup, saying that we're not going to take out the high. But you can see how stretched we are right now away from it. It's a 30-minute chart. And here you can see just where once you get back under this 30 stalls it. So your power charts really very helpful. And this poke right here, and then stalls from pre-market, and then we come back down. So it looks to me like right now, and a lot of times I've noticed this, I don't know if you guys have or not, but I've noticed that sometimes that prior low becomes pivotal. It'll go over it and under it, but that becomes a new pivot, and it should be, because above it, bouncing, and below it, looking for new support. So pretty well stretched. I've got well after the 11:30, and I'm suggesting again, make sure you're not the last one to leave Dodge. And if you find a bounce trade you like and you want to bang it one more time, okay. But I'm going to consider the primary trade is done already. Yes. To answer your question, Don, yes. And let me wrap up this video. Thanks for coming, guys. I'll take one more minute or two after I end the video, but thank you for coming. And I think we've had a good week. Got some great new traders here helping us with our ideas. Hope that things we're sharing are helping you. And a reminder, we welcome big and small and in between. We're certainly not so blinded by our own methodology we can't learn new ideas, and we don't want to intimidate newer traders. We want you to feel comfortable here asking questions and learning from the guys who have had 30 years experience, 35 years experience. You bet, Sanjay.